Hello and welcome back to another episode of Coffee and Stocks. In today's video, we're going to talk about today's market. We're going to talk about earnings report, etc. But before we get started, how about we get some coffee? All right, I just want to get one thing straight, and that I'm not a financial advisor, so please do not take my words as advice. Don't forget to drop a like on this video, as well as press that amazing subscribe button, because honestly it does go a long way in supporting the channel. Don't forget, I am doing a $60 giveaway. All you have to do is just like the video, subscribe to the channel, and drop a comment down below, and that will give you an entry to the $60 e-gift card. And on Friday I will be pulling out the winner. Now today was kind of crazy. Not really crazy. Yesterday's futures were saying that the market wasn't really going to be that good, and unfortunately it was right. Let's go ahead and look at the heat map, and oh my god, it's going to look pretty scary. Look at this nastiness. Oh my gosh, it's another bloodbath. It's another sell-off. It's another craziness. Honestly, I look at it and it's like I'm losing money. But even though I am losing money, I have to have a clear mind, right? Microsoft down 2.84%, Google down 2.98%, Facebook down, JP Morgan is down, Bank of America is down, Amazon just up just a little bit, but they were down pretty much the whole entire day. Apple also down, Johnson & Johnson, Pfizer, all those people who are doing the vaccine also down. You know, it's pretty crazy how down the market was lately, and there's certain reasons why, and you guys already know majority of it, but we're still gonna go through it. Now there is a video I do want to show you guys, and make sure to pay attention because it's pretty interesting what this guy says.
And welcome to ETF Edge, your go-to place for everything ETFs. I'm your host, Bob Pisani, and once again, this time only two, of the very best in the business with us. First, Dave Noddick, my old friend, CIO and Director of Research at ETF Trends, and Burton Malkiel, who's a Professor Emeritus of Economics at Princeton University and author of the legendary investing book, A Random Walk Down Wall Street. Professor Malkiel was one of the first to ever note that an average investor should just stick with index funds. That was way back in 1973 when the first edition of Random Walk was first published, and it's now in its 12th edition. Guys, thanks very much for joining us. Normally I'd start with the ETF question or something like that, but I got to start, guys, with the markets right now, down over 800 points in the Dow Jones Industrial Average, and really been trending down for a while now. Professor, could you just give us a minute of your thoughts on the markets right now? I know you pioneered the random walk concept, but it certainly seems like the market is reacting to the news of stimulus or the lack thereof, and the fact that the reopening story for the moment is not going very well.
No, exactly. I never said the market did not react to news. It does react to news. But true news is something you can't predict from the past. And that's one of the reasons why the market behaves somewhat randomly. What's happened is there was a much larger spike in coronavirus cases than we had anticipated. We had anticipated there would be some stimulus passed before the election. That does not seem to be the case right now. And so the market is selling off. But look, what we do know is that at some point, the virus will be contained. At some point, we will have effective treatments. At some point, we will have an effective vaccine. At some point, we will get stimulus. Maybe not before the election, maybe not even before the new administration comes in. But at some point, we will get the stimulus. And so I say to investors, don't try to time the market. Certainly don't sell out now in view of the market down over 800 points. Stay the course. And the best investors are ones that don't try to time the market.
Now that's something very important that he said. Don't try to time the market. that kind of correlates with saying people shouldn't panic, people shouldn't sell off. And if you don't know who Burton Malkiel is, he's an American economist. He's a professor. He's a writer. He did write a book, A Random Walk Down Wall Street, and it kind of, emphasizes on random walk hypothesis. I think he says, and it's typically exhibits signs of random walk, that someone cannot consistently outperform market averages. And I know a lot of people say it's like, oh, if you put this into the system, you have a higher percentage of outperforming the market or beating the market and all that stuff. It's kind of hard, right? It's a hard thing to outperform the market or be ahead of the market. And he says it right straight off the bat. The market, has an effect, or has, it reacts to news that are out there. What's the current news that are out there right now? Information about the stimulus. Like they said in the beginning of the video, there is no stimulus quite yet. They might have it after the election. So that's 2.5 weeks from now. Now, if the market goes up again and then they keep postponing it, then it's just going to keep dropping, right? So it's going to be a market full of ups and downs. You have to be 100% sure, and you have to, that aware of all that volatility. Now, he does say, do not panic, because it can cause huge rifts. If you panic sell, then it just causes more of a downwards trend. And that's pretty scary, And it says right here on CNN Business, how did we get here? It's been a roller coaster year for stocks. 3 major indexes have rallied back. Obviously, they're saying this since the coronavirus, by hopes over government spending. After an ugly September, when tech stocks led a plunge nearly into correction territory, the S&P 500 is still about 5% above its late September low. For example, even with Monday's sell-off today, right? So after today's sell-off, so he, Macmillan, I think he says that there's still a bit of cushion in prices even after today's sell-off. Yes, there is still a little bit of cushion, but it's not enough cushion for people not to freak out and for people, to not panic sell. Now, I'm not a financial advisor, so I'm not telling you not to sell or to keep buying. Me personally, I'm not buying any more stocks. If you guys are buying some stocks, let me know what kind of stocks you guys are buying down below, because this is you help me, I help you kind of thing. And if you have information that would be good for other people, don't hesitate to share, because we all work better as a team, and we all get more money as a team, and we could raise the prices and all that stuff, and we all like to get more money. But anyways, he says don't panic sell. A lot of people kind of use the stock market as a gambling, to get that gambling itch scratch, and that could be true as well. A lot of people do look at it and it's like, well, if the market is saying this, then maybe I should put my money here. And it's a gamble because it may or may not go that way, so there's definitely ups and downs on today's market. Yes, they're saying that there's a little bit more corrections. It kind of hurts, but we're still pretty down overall, since last March, or this past March. Now, I do want to say, everyone needs happy news, and I think talking about gambling and talking about happy news, this is something that kind of got my my attention, and it says the best day of the year for the stock market is almost here. October in election year is typically pretty rough for investors, and after Monday's ugly session, it looks like that could ring true once again. But Wednesday is coming. Why is Wednesday super important? Well, if you look at this image here, I don't know if you guys can see it. It says S&P 500 index single day average returns from 1950 to 2019, and it gives you an overall thing. You know, all these days, you know, sell off faster and they sell off, but it has an average of a positive 0.54% on October 27th, which is tomorrow. October 27th? Sorry, October 28th. So they're estimating that that's going to be the best day, which is in a couple days. If it is true, I wouldn't mind getting a green day, a very green day in my portfolio. An average of 0.54% on October 28th to beat all other over the past 7 years. The second best day of the year is currently after Christmas. Then there's October 19th, the worst day of the year, thanks mostly to the nasty crash of 1987. That's them saying, obviously, everything comes into consideration, the news, the stimulus, the election, all kinds of stuff, the virus, you know, everything like that. Don't forget that there's a couple of companies this week that are coming out with earnings. And if we see it right here, you know, today after the market closed, Alphabet had earnings. Tomorrow, 3M has earnings before market open, and Pfizer has earnings. Microsoft also has earnings. I will be talking about them tomorrow. Caterpillar as well. That's super important. And then Wednesday, Fastly, Etsy, Visa, eBay. That's pretty cool. Sony for me personally, just because I have Sony cameras. And then you have Apple, Amazon, Facebook, Spotify. You know, that's on Thursday. And then Friday, ExxonMobil, Chevron, and even Under Armour have earnings. Don't forget to not panic sell. Don't get crazy. Don't panic sell. Don't start saying, oh, you know what, I lost a lot of money. Yes, but just like the Burton said, we are eventually going to get out of this hole. We are eventually going to get, the stimulus. We are going to get past this virus. It's just a matter of if you keep a level head and you know what you're doing in the market. You know, obviously we can't beat the market, but we could react to it. But if everyone is selling off, that could be an easy point for you to buy back in, because buy low, sell high kind of thing. Anyways, that was today's video. Hopefully you guys liked it. Don't forget to drop a like on this video, as well as press that amazing subscribe button, because you guys are freaking amazing. Now, if you drop a comment down below, that will give you an entry to the $60 e-gift card that I will be pulling on Friday. And if you drop a comment and you are a subscriber, you have an entry, and I will be pulling it out on Friday. All right, so I will see you guys next time on Coffee and Stocks.